Good afternoon, everybody. You will notice it's not Yadvinder stood at the front today. I have got the envious task of stepping into his shoes. My name is Justin Adams. I'm on the advisory council for the Leverhulme, and it is my great pleasure to be asked to introduce Sophus this afternoon. So I'll come to Sophus in a moment, but it's great to see so many people in the room for his talk. And I know that many people have signed up online for what's going to be an electrifying hour or so. My job is to say, to remind everybody at the end, there are drinks in the atmosphere room at 6 o'clock. So please do come, where the conversation will continue to be lively over a glass of wine at the end of no doubt a long week. So please do come join us, and Sophus at the end to continue the conversation around about 5:36, depending when we wrap. I also want to just highlight the next couple of weeks of talks for these wonderful series of seminars. So next week, Laura Pereira will be here from South Africa and talking about why we need transformative scenarios for people and nature. And if you've ever read anything Laura has written, that's going to be a truly extraordinary talk. And then the week after, Nicola Ranger, who's doing all sorts of extraordinary work now on nature finance, has got a talk on reimagining Bretton Woods, placing nature at the heart of global finance and governance. So they're the next two Fridays to sort of tantalize you as to sort of what's coming. But this afternoon is really all about Sophus, who I asked him, how do you want me to introduce you? And he simply said, just as Sophus. I think you all know some of the extraordinary work Sophus has been doing to really challenge how markets are working for nature. He is a prolific author. He serves, I think, is on 3 advisory boards for the UK government now around how they are getting nature markets to work and challenging them, I am sure, every step of the way. He is a podcast host for Economics for Rebels. He's been awarded various early researcher awards, and I think one of the great pleasures for me over the last couple of years has been to get to know Sophus and start to work together on really challenging how we think about nature markets. And he has helped really shift my own thinking over these last couple of years. And so I'm really excited for what you're going to be talking about this afternoon. And without any further ado, over to you, Sophus.
Thanks so much, Justin. Thanks so much for giving me your Friday afternoon. This is a precious slot. I'm really happy that you're here. And today I'll be talking about nature markets. So this is just a tale of 2 little nature markets. This is actually not a picture from fieldwork. This is just a random image I found after the best one I could get after 15 minutes of Googling. But this is from Victoria in Australia. So in the summer of 2019, I was in Victoria in Australia investigating the outcomes of their biodiversity offsetting market, their state offsetting market. And I was excited. It was my first day of fieldwork, and I hopped in my hire car, and I'd finally been given an offset that I could go visit and go, actually see what was happening on the ground. So I drove 700 kilometers that day to this, and I was expecting to find a beautiful piece of maybe temperate rainforest or something, like something beautiful, something that was worth a multi-100-million-pound market. And I arrived, and it was a site that was something like this. And I went out with a consultant, and I was kind of taken aback. I was like, what is this? It was basically the site was a small fringe of trees at the back of a farm behind essentially a degraded pasture. And after a day, basically in the field with this consultant, going out, measuring trees, going out, trying to assess the value of this land, I turned to him. I was like, this is a lot worse than I thought. This is a bit rubbish, isn't it? And he just leaned back on a tree and he went, you know what? I think this is going to get a lot of powerful owl credits. I'm like, wow, firstly, exciting that there's a creature called the powerful owl. That's exciting. But also just what's happened there. So how is this optimal habitat for the powerful owl? What kind of commodification process is going on here that means that this is of value? On the other hand, last summer, I was out next to visiting another offset site from Biodiversity Net Gain, so English offset market. This is a beautiful site that's managed by our local wildlife trust that is essentially funded through selling biodiversity offset credits to developers in England. And I visited this beautiful habitat bank at Duxford Old River. It was a gorgeous day. I mean, literally the air was full of life, buzzing at this beautiful restored sort of riverine habitat next to a field they were able to purchase from some farmers that was essentially low productivity agriculture. And so what this tells us is that, you know, nature markets are not uniform. They are a function of the governance and institutions that underpins them. And of course, the outcomes that they deliver is going to be a function of how these markets work. So this is what my talk is going to be about. Right? My talk is going to be about these four things, and I'm going to try and make it as simple as possible. The first one is, how can you make money from nature? So how does this work? What are nature markets? The next one is, if you pay for this thing, this nature, how can you make sure it's real? And then if you have bought a bit of nature, can anyone check if you're actually delivering it or do anything about it if you're not? And lastly is going to be summarizing some work I've been doing for the last 2 years on how we upscale nature markets, if that's the direction that we want society to take. And then one of the major barriers that you'll see is this question: is it actually very profitable to deliver this thing, this nature? Okay, so for the broader context, this is just one of many reports that highlights the global biodiversity funding gap, which is the so calculated through various methodologies, but it's essentially the difference between how much money we need to save nature, according to various consultants, and how much money is flowing into nature today. And basically, it's very big. And another key takeaway from this is the majority of the problem, pretty unambiguously, is in the public sector. So it's reducing perverse subsidies that degrade nature, and upscaling domestic budgets and tax policy, etc. And a small component of this solution is private nature markets. This particular assessment from the Palsman Institute basically suggests that the easiest finance to upscale at the moment is biodiversity offset funding. And they came up with some truly ludicrous projections for how much biodiversity offset funding could be produced over the next few decades. So currently around the world, about $12 billion a year flows into biodiversity offsets around the world. For reference, the global voluntary carbon market, which gets an awful lot of attention, is probably around $700 million a year. So we're talking an order of magnitude larger are these state and national biodiversity offset markets, what I call nature markets. In the UK, this is roughly what our financing landscape looks like. So we're trying to build loads of different nature markets. Biodiversity Net Gain is our enigmatic one that became mandatory as of February this year, and I'll go into it later. We've got our domestic carbon markets, various other instruments, but all of this is on a sort of a baseline of a pretty catastrophic decline in public sector spending on conservation. So this is data that's quite old now, but essentially we just took data from Biofin tracking how much different countries spend on conservation as a result of public spending. And what you can see is over the last decade or so, the UK became this international outlier in how little it spends on conservation as a percentage of its public budgets. It went up a little bit since this point. So the top right is the most recent data from JNCC on our public biodiversity spending, but you can see that we're still spending around 20% less on biodiversity today than we were in 2008, right? So that is our trajectory of travel, which is of course a travesty. It's an absolute public policy disaster that we've reduced the amount of public spending on biodiversity whilst nature has declined over the last 2 decades, right? Now, there's some really important high-level policies that are driving increased rhetoric about private investment in nature. The main one is the way it's been firmly embedded in the Kunming-Montreal Agreement, so the post-2020 Global Biodiversity Framework. There are these commitments for high-income countries to increase public biodiversity-related spending in low-income countries to $30 billion a year. But then, you know, it clearly puts the emphasis on private finance when mobilizing at least $200 billion a year, primarily through leveraging private finance, promoting blended finance, and stimulating innovative schemes such as green bonds, biodiversity offsets, and credits. This really caught my attention at the time because biodiversity credits were explicitly written into the Kunming-Montreal Agreement, and they didn't even exist yet at this point, right? They basically didn't exist. So then we've got other policy drivers like the EU restoration law, which essentially is going to make it mandatory for EU member states to achieve certain restoration objectives. And as part of that, they're all going to have to publish their national restoration strategies. And as part of that, they're going to have to publish how they're going to finance them. And it's expected that private finance is going to be one of the major ways that they'll fund nature recovery. In the UK, we've got the Nature Markets Framework. For reference, they want to upscale private investment in nature to £1 billion a year. I can't remember when that deadline is, but as you saw from my previous graph, public spending is only about £600 million a year, right? So they want more private spending than public spending within the next few decades. Then we've got other drivers, the EU Corporate Sustainability Reporting Directive, which is supposed to incentivize companies to do this stuff. The Task Force for Nature-related Financial Disclosure, which is a voluntary disclosure mechanism, which is also supposed to incentivize companies to do this stuff. But how do companies actually make money from nature? Really, really simple, oversimplified typology for a kind of layperson's review paper that we wrote. But basically, you've got different sources of finance. Different people want to buy different stuff. And broadly speaking, there's a few ways that you can commodify nature or deliver revenues from investing in nature. The kind of initiatives, that land management activities that you might be able to invest in to derive revenues might include agroforestry, active restoration in some cases, natural regeneration very uncommonly. But basically, you've got different mechanisms. You might invest in insetting if you're a corporation, which means investing in improved sustainable agricultural management practices in your supply chain, which might have biodiversity co-benefits, whilst also reducing your susceptibility to yield shocks or stuff like that. You might buy carbon or biodiversity credits or offsets, which could themselves be delivering land management like active restoration or rarely, natural regeneration. But by far the majority of investment in nature is public spending, right? Just direct funding, investment in national protected area networks and biodiversity as a public good. Now, even the term nature finance is kind of misleading. It implies there's a whole lot of sort of private finance going around investing in nature. But this is a nice review of what so-called nature-related investment funds are actually doing. And just a lot of text. But basically, the highlight here is, firstly, not all nature-based solutions are equal from a finance perspective. Most existing nature-related investments are in established economic sectors that deliver well understood and attractive commercial returns. So so-called nature finance is mostly just normal finance. Secondly, the lack of ability to monetize adaptation-related benefits does mean that projects are skewed towards those that deliver either traditional commercial revenues or carbon-related returns. That's code for most nature-related investments are actually in agriculture or forestry, right? So the stuff that's actually what you would call nature finance, investments in ecosystem restoration, is a tiny, tiny, tiny slice of what the banking sector calls nature finance. How does this kind of stuff work in practice? All right, so of that tiny slice of nature finance that is nature markets, this is just a rough schematic of how that might work, right? Basically, all the world's nature markets are offset markets. So that is you implement some kind of development, you lose some nature as a result of the development, you pay somebody to provide some nature restoration or conservation to compensate for the damage that you've done as that development. That's the top panel there. And in that panel, how are you earning money from nature markets? Well, the provider of an offset is being paid by the developer. So that is a cash flow. You are earning money from delivering some kind of improvement in biodiversity to compensate for a loss elsewhere. There might also be financial intermediaries involved. This is where investors come in. So, for example, you might borrow money from an investor up front to do your management measures. And then you might sell credits from those management measures over the next 10 years. And you might use the money that the cash flows that you derived from selling those credits to pay back your investor at, say, 10% a year. So there is also a role for financial intermediaries in these nature markets to provide upfront capital for investing in the stuff that then generates revenues so you can pay them back and generate some profit yourself. So this is what we mean by most nature markets. Okay, that's our brief whistle-stop tour of what we're talking about. So let's get on to the science. If you pay for a thing through a nature market, you pay for a unit of nature in a nature market, is it real? Now, there's two major problems that we have. the first one we'll focus on is adverse selection and additionality. So essentially, when you're buying the compensation of a loss elsewhere, right, it's really important that the thing that you're buying is real. Otherwise, that loss was allowed to go ahead on the promise that you were delivering something real elsewhere, but that thing hasn't been delivered. So the world's actually got worse. So that loss has been permitted. The problem with offset markets, carbon and biodiversity offset markets, is that people opt in to delivering land management on their land when their opportunity costs are low. That's what we call it in economics. It basically means when they were most likely to be delivering something similar anyway, when their costs are low. So in a market, in a nature market where sellers opt into selling land management activities, you're basically selecting systematically for people who were most likely to have been doing similar stuff anyway. So this undermines the additionality of the specific commodities that they're selling. Now, ex post evaluations across nature markets all over the world have systematically detected widespread non-additionality. That basically means that products are being sold in these markets that would have been delivered anyway. In the case of the very high profile ones in the voluntary carbon market, that means you're selling carbon for avoided deforestation, but that deforestation wouldn't have occurred in the first place, right? In the case of lots of our biodiversity markets, we'll get onto it. But there's been one exception to this kind of general trend, which is that the US wetland mitigation banking system, which generates increases in the area of wetlands that actually wouldn't have happened anyway. And that's summarizing a much more nuanced finding. We've had lots of evaluations. Like the carbon market stuff is all the stuff that you've read about in The Guardian. We also have done these kind of evaluations in biodiversity markets. So the top one is from New South Wales. That found pretty low additionality. The middle one is from the Species Conservation Banking System in California. That had a really weird result that showed that offsets not only weren't additional, they actually prevented transitions to natural habitat that would otherwise have occurred. So it was actually actively harmful rather than not being additional. Then we've got some examples, one high-profile example of an offset that actually worked. So this one, the offset for the Ambatovi mine in Madagascar was a very high-profile offset that is currently on track to prevent as much deforestation as the mine caused. So it might actually work, but it's not traded in a market. So it's not a nature market per se. It's a direct bespoke offset for a specific mining project. And then this result from the US wetland mitigation system suggesting that the additionality, at least in the US wetland mitigation system, is higher. Okay, so we contributed to this literature with our own assessment of the additionality of a major offset market. This is from Victoria, the field work that I was talking about earlier. And basically, what this chart shows, at the top panels represent offsets that are protecting existing forest. And the bottom panel represents offsets that are trying to increase the cover of forest. So the top ones we're calling avoided loss, and the bottom ones we're calling regeneration. And then we basically compare what the change in woody vegetation cover was in these offsets versus statistically matched control sites, or two different types of controls with different justifications. Basically, what we found is that 80% of the offset system, which is the so-called avoided loss component, did nothing. So it protected forests that wouldn't have been cleared anyway. And about 20% of the offset system, depending on the way you do the stats, either did nothing or did a little bit. So it caused a little bit of forest regeneration that would not otherwise have occurred. But that this seems unlikely, very unlikely, to have achieved the policy's overall objectives of no net loss of biodiversity. But this particular exercise is really useful for demonstrating some of the nuances in nature markets. Basically, so there was no difference between offsets and controls for about half of the sites. Controls actually outperformed offsets for 22% of the sites. So that means that the offsets were net harmful. But for 30% of the sites, offsets outperformed their controls. So those offsets actually prevented more deforestation than otherwise occurred. And for 7 offsets, they actually worked really well. So that they prevented the loss of over 10% of the vegetation on the site. What does this tell us? Nature markets are susceptible to this adverse selection. Lots of the projects that select into nature markets do nothing, but some do a lot, and some are really good. So how can we create nature markets that only allow those guys to participate and not allow all of that stuff to participate? That's, for me, one of the questions that have been driving my research over the last 5 years. Okay, that's our case study from Victoria. Now let's move on to England, biodiversity net gain. So the second component of is the nature that you're measuring real is the question of what proxy are you using to measure nature? So one is about additionality, would it have been delivered anyway? And the next one is, are you actually measuring the right thing? So we'll move to England for this one. This is a biodiversity net gain as a policy that was made mandatory under the 2021 Environment Act, made mandatory as of this year. And basically, it's a new approach to planning and land management in England, which aims to leave biodiversity in a measurably better state. You need biodiversity to be at least 10% better off after your development than it was before. 10% measured according to an Excel spreadsheet. So that's the diversity of life measured in an Excel spreadsheet. How does the Excel spreadsheet work? Well, basically, a consultant goes out and visits a particular site where a development is occurring, and they score all the habitats on the site according to how big they are, what kind of habitat they are, and how good they are, with some other stuff that you faff around with on the side. And then that number needs to be at least 10% lower than the same number projected forward into the future for the site, with, again, a little bit of manipulation to account for if you deliver stuff in the future, you get fewer points for it. So it's better to deliver stuff in the near term, and that's to account for the uncertainties that come with delivering stuff in the future. Right, so this is what our entire domestic biodiversity market is constructed around, these Excel spreadsheet calculations. Now, what is it actually delivering? Well, so we spent 3 years collecting data from early adopter local authorities. So this is before it became mandatory in February this year, which is actually, I'm not going to talk about it in this talk, but it's brought up some amazing array of unexpected, crazy surprises. But basically what this data set from early adopter councils is showing for a sample of all of the developments in these 6 early adopter councils that were delivering biodiversity net gain is it demonstrates about a 20% biodiversity net gain according to the Excel spreadsheet, but about a 30% reduction in actual habitat area. Right? And that is because this Excel spreadsheet allows you to trade reductions in the area of open green space today for promises of future condition increases on smaller habitats in the future. So the only thing that we're really observing is this is actually drawing down on open green space and natural habitat, whilst basically creating the illusion that it's actually going up by 20%. So that's what our metric is doing in England. Now, back to this question of, is it a good proxy? So we know, it's not correlating with there being more land for nature. It's actually correlating with there being less land for nature. Does it actually correlate with the diversity of life, with biodiversity? So this is a piece of work that we submitted a couple of weeks ago, led by Natalie Duffus, who's a brilliant PhD student in biology, and went out to over 40 different sites, assessing the value of the site according to this Excel spreadsheet, and actually counting all of the invertebrates on these sites using standardized sampling methods over a 2-year period. And this analysis found no correlation, right, between actual biodiversity, actual observed biodiversity, and the numbers in this Excel spreadsheet. So the entire system, the entire nature market, is based around a proxy that does not correspond to the actual biophysical reality, right? So we've got these kind of serious measurement issues in nature markets. I've talked about additionality. I've talked about bad proxies, a lack of validation of the specific measures that we center these nature markets around. Then, we also do work in lots of other nature markets that I'm not going to cover in today's talk. We've done work on the emerging biodiversity credit markets, where we've identified basically a systematic lack of appropriate counterfactuals. And all of this stuff is important because if your biodiversity proxy isn't validated, you are opening yourselves up to a huge risk that you are delivering something that doesn't correlate with the reality that you want. You're delivering a kind of artifact, a kind of illusion that doesn't actually correlate with the nature reality that you want. And markets are very good at incentivizing the exact thing that you incentivize, at delivering the exact thing that you incentivize them to do. So if you create a market in which the cheapest and most profitable thing to deliver is a specific type of grassland, you can bet that your market is going to be delivering you a lot of that specific type of grassland. That's one of the issues with markets. Now, the well-intentioned participants in these markets might go beyond this and use these revenue mechanisms to deliver great conservation. But that is not what the structural incentives of the system as a whole are. So the system overall probably won't. So why are these metrics not really working? Well, I've been sitting in policy processes for the last 4 years, and I think it's down to this. It's fundamental tensions between the ease of use and ecological realism, right? Which is something that's been documented for many decades. It's really hard to commodify nature. It's really hard to build a metric that captures it appropriately. Plus, it's really hard to do it within the constraints of a planning system that has no ecologists and no people to actually implement it. So you have to make the system as simple as possible to match the specific resourcing of the regulator, essentially. So when I give this talk, when I talk to nature finance experts about biodiversity markets, and I point out all this stuff, they often say, Sophus, don't let the perfect be the enemy of the good. Whereas I view it the other way around, right? I've been studying nature markets across their history. They originated in the 1970s. So I've been reading every paper published on nature markets over the last 50 years. And the way I perceive this is we just can't accept a nature market, something that has an obvious exploitable structural weakness. So when you tell me, don't let the perfect of the enemy be the good, the perfect be the enemy of the good, I just hear, oh, well, if it's not perfect, there is a giant structural weakness that will be exploited. And that's what I hear. So biodiversity markets are almost never trying to optimize for biodiversity, right? They are always implemented as part of basically planning processes to achieve other kind of often contradictory political objectives, like, for example, streamlining the planning system, which was one of the major justifications behind the implementation of biodiversity net gain in England, or the wetland mitigation system in the United States. Okay, so that's measuring the stuff in nature markets. Now, let's talk about, if you participate in your nature market, can anyone actually hold you accountable for delivering stuff? This is just a review that we did a few years ago, summarizing all of the published records of the actual compliance rates of people delivering biodiversity offsets in these nature markets. There's been better work published since by other authors, but I just had this figure to hand, and it all but says vaguely the same thing, right? Compliance rates are pretty low. Of course, they're variable, but often compliance rates in these offset markets are sitting at around 50%. So in different systems, that means different things. In the US, that means they don't the specific wetlands they're delivering don't achieve all of their ecological performance standards, all the way through to the most extreme result, which is this one from Lucille Bezombers in France, who visited a sample of offsets in a specific French municipality and found that 30% of them didn't exist. So that's a pretty systematic compliance failures in that market there. Now, in our own flavor of this, our governance challenges around biodiversity net gain in England, this is a paper we published recently that essentially tries to quantify from our data set of biodiversity units delivered in these early adopter councils, how many of them are at an extreme risk of not being delivered because of systematic governance problems. We think it's about a quarter. And we might get on this in the questions. I mean, there's a long story behind how we came up with this number, but basically we think about a quarter of all the biodiversity units delivered under biodiversity net gain are at an extreme risk of non-delivery because they fall within a governance gaps, which means they're both kind of legally unenforceable and not monitored. So that we really can't hold that stuff accountable. Now, this compliance story is a feature common to all nature markets. So in the North American systems, a brilliant colleague, Sebastian Theis, has been publishing work demonstrating that when habitat banks sell credits into those nature markets in the US, over half of all credits are sold within the first 3 years of these banks operating. Now, they're supposed to last for decades, but they get over half their revenues in the first 3 years. So what kind of systemic incentives does that have to maintain the long-term ecological quality of these things when they get half their revenues within the first 3 years, right? In Australia, amazing researcher, Megan Evans, has been doing some amazing work, both working in government and as an academic, understanding the governance of offsets in the Australian systems. And she published this wonderful paper demonstrating that that offsets became so politically contestable and planners had so little resourcing to be able to deal with offsets as part of planning applications that they basically they utilized the mechanism whereby they kicked the can down the road into the post-planning stage where it basically passed beyond the reach of democracy. So democracy can act on planning applications, but they kicked the offsetting part into the post-application phase, so that democracy no longer had a say or oversight over the kind of offsets that were being delivered. I've already covered Lucille Bezomber's work in France, and my talks about nature markets are focused a lot on offsets because that's what most of them are. But there's other types of financial instruments like environmental impact bonds that are also forms of nature finance. And an amazing colleague, Ben Thompson from Monash University, has done a really cool work actually analyzing the specific key performance indicators underneath environmental impact bonds, and also found that they are just unhinged from what a conservationist would recognize as like a good way of measuring nature or a good way of measuring the outcomes of a conservation project. So all of these things are embedding proxies or key performance indicators that like we wouldn't recognize as a real like actual observed outcome. All right. Now we've been coming up with some ideas for how you can kind of fix these systemic issues, and this is work that I led with Tom Swinfield, who's one of the leaders of the Cambridge Centre for Carbon Credits. The idea that we put forward in this paper is we think you could fix a lot of the fundamental issues in nature markets if you only sell credits after they've already been proven to work. So you don't make any assumptions that they will go on to work in the future. You only sell them after they've already been proven to work. And I mean, we make the case that if you really want to scale up nature markets, this is the way to ensure that that investors can be confident that the thing that they're buying is real, and therefore we make the case that this is something that could be a fundamental characteristic of nature markets that upscale. We also talk about how it's really important that we get those upfront projections of additionality correct. So we make sure that we only select for things that wouldn't have been delivered anyway. And if you want to sell credits based on a future projection of some biodiversity that will be delivered, then as a minimum, you need to make sure that there's no conflicts of interest in the method that you use to estimate your additionality, and that it's highly conservative, so that as a minimum, it underestimates the additionality. If you have any issue where you make a projection that systematically overestimates your additionality, that's a recipe for systemic overcrediting. So that's the case we make in this paper. All right, final section of my talk. Let's just talk about the actual financial logics that underpin these nature markets. So I've talked about all this policy rhetoric that that highlights the need to upscale nature markets and how they've already been embedded in numerous policies. Let's talk about the actual financial realities. So for the last 2 years or so, I went out interviewing biodiversity finance experts across Europe and running focus groups across Europe to ask them what are the challenges, the barriers and opportunities for upscaling private finance across Europe. The answers are actually, lots of them are not particularly exciting to people who work in this space. The opportunities come in lots of the stuff that we'll already have heard of. There is undeniably increasing specialized expertise in nature finance. There's more and more people who have a background in both conservation and finance, and those are important things to have skills in if you're going to try and make this stuff work. There's a lot of real interest in technological innovation that could unlock these potential financial mechanisms. For example, real-time monitoring of changes in forests, in forest cover. These are the kinds of technological innovations that could form the basis of upscaling some of these markets. Lots of financial innovation that we don't see on the conservation side, but that's going on the finance end, which is, for example, aggregator funds, so ways of aggregating lots of investments together so that you can disperse funds to small conservation projects that would otherwise never have attracted capital themselves because they were too small to attract mainstream investment. So that there's lots of different forms of innovation that are coalescing to push the nature markets agenda and to increase its feasibility. A major one that came out of our research is macroeconomic issues, especially affecting farming. So in a lot of countries across the EU, and certainly here in the UK, one of the consistent patterns that we found was that farming is becoming increasingly economically unviable. And so farmers and land managers are looking for ways to diversify their income streams. And nature markets are posited as one of the ways that they can do this. That is a major policy driver for increased interest in nature markets. On the supply side, farmers are actually genuinely looking to diversify away from farming because it is so precarious. Now, lots of the challenges to upscaling nature markets are some of the stuff that's been talked about for decades, right? Fundamental tensions between finance and ecology. Right? When an investor invests in something, they want to be able to project forward its cash flows over a 10-year period. They want to understand how the business is going to look. They want some degree of certainty so that they can properly understand the risks associated with their investment. All these kind of things that nature just don't provide very easily, right? Nature, fundamentally complex, fundamentally stochastic. Serious temporal mismatches, right, between doing good conservation and the kind of and financial investments. So, for example, when investors choose whether or not to invest in something, they typically discount their cash flows. What this means is that they care more about cash flows that happen today than those that happen in 10 years. And those that happen in 10 years get less weight in their overall calculations. But conservation don't work like that. We need to conserve stuff in the long term. And so anything that discounts your long-term revenues is likely to be misaligned with the timescales of conservation, this kind of stuff. There's also some fundamental social perceptions, right? A lot of people just don't like the idea of private finance being in nature, right? So this is going to be a fundamental barrier to its upscaling when some of it is actually quite politically unpopular. But this is the kind of the big one at the heart of it. Most conservationists don't realize how profitable stuff has to be to upscale. To attract mainstream investment, investments in biodiversity need to become very, very profitable. Not just a bit profitable, not just break even, but this is a nice analysis from analysis of the investments conducted by a biodiversity-focused private equity firm in the States. And Flammer et al. Found that the investments that they actually invested in achieved a mean target internal rate of return of 15%, 15% return a year. And those that essentially were underwritten by the state, where some of the risk was borne by other actors through blended finance, had a mean of 12%. This means that we're talking about investments for these things to attract mainstream investment, they essentially need to deliver the same kind of financial performance as just conventional market activities or like US tech stocks. That's what it takes to attract institutional capital into these kind of investments. And we are so far away from this. It's hard to describe how much of a delusion it is that nature can start producing you consistently 15% a year returns. Now, this is a really nice quote from one of my interviewees. I would consider us very risk-tolerant investors, very in the grand scheme of things. And we're looking at things that others would definitely not look at. But even for us, so many of the projects we see are it's just not clear where the revenues are going to come from. And a senior public policymaker in the EU, yeah, they just have easier ways of making money. So that's the fundamental barrier to this stuff upscaling, right? It's just not easy. I've talked about the kind of tensions between finance and ecology. Now, public policy is going to play a really important role in deciding the future that we want to take, right? If our collective decision is that the way we're going to fund nature and we're going to solve the global nature funding crisis is by upscaling markets, then public policy is the only way to do this. And it will require the most insane and intense public intervention to get these kind of markets to upscale. The alternative is that we find alternative ways of funding nature recovery, like traditional public finance, which already does over 80% of it. And we need to decide what vision of the future it is that we really want. Our research found that public policy, plays an absolutely critical enabling role in these nature markets. It is both the enabler and the destroyer of nature markets in some way. We found these fundamental tensions between different branches of government and different aspects of public policy that were simultaneously encouraging and then destroying nature markets at the same time. Tensions between enabling accessing land and preventing the access of land. So, for example, talked to an interesting program aiming to increase private investment in nature, but through essentially providing some concessional finance, so state financing to pay part of the bill, basically. But this same finance had a conditionality where it said public money can't be used to buy land, which means that none of the conservation projects within this fund were eligible because all of them were looking to buy land in order to do conservation. So that meant that the public finance was a fundamental constraint on even getting the access to the conservation, right? I found this very interesting tension. Investors want de-risking, right? They want to reduce the risk on these investments, to increase the risk-return ratio, to be more in line with conventional rates of return. But one of the main things they want de-risking from is government uncertainty. So they want de-risking from government itself, right? Which is another really weird. So if governments provided more policy certainty, they wouldn't have to provide so much de-risking, which is interesting. And then there's a real issue with policy coordination. There is loads of different forms of private and public finance that can be used to finance conservation projects. In lots of situations, they compete for each other in really unproductive ways. And so we definitely need to find a better way of coordinating different types of finance to get different types of finance into the right places that meets the characteristics of that specific form of finance. Right? Okay. So as I make the case, right, nature markets, a lot of people say, nature markets, yeah, this is how we're going to upscale private investment in nature. And I think that's kind of ridiculous, because I just see nature markets as public policy. Right? They are just created by public policy. They're just a different way of achieving a public policy objective, which is like finding the resources to save nature. And nature markets are public policy. If we want nature markets to upscale, if this is our vision for how we're going to achieve the global biodiversity funding objectives of the future, then governments are needed to create those markets. They're needed to govern the markets to make sure that they actually work. And we then need to pay the private sector to even participate in these markets. We then need to subsidize investors to even participate in them. That is the levels of state intervention that are required for this thing to become the way that we achieve these funding challenges of the future. So private investment in conservation is, for me, is an extension of public policy. And after the last 5 years of work, I've been left with these overarching questions. Yeah? One is this vision for the future actually more efficient, more cost effective, or cheaper to the state, or scalable than just direct public investment? My hunch right now is not, but nobody's actually proven this empirically, right? And then this last one, I've been left with this kind of like ghost of a question in the back of my mind, like, are nature markets kind of just the performance of the illusion of keeping conservation off the public budget? Right? Just a kind of a huge amount of policy rhetoric to kind of avoid the harsh truth that this is actually what the only way that we can sustainably fund our environment. Okay, so my second to last slide, like the classic thanking slide. I am like the beneficiary of like every structural privilege in the world. And one of my great privileges is, for my career, I've just been led by the most astonishing leadership. So Joe Bull and E.J. Milner-Gulland have been the most astonishing mentors to me, and I owe so much to them. I co-supervised a team of people who are just way better than me. And that's like just so nice. It just means that we can make progress so much faster than I would be able to do it on my own. And I owe so much to colleagues, again, who are just so much better than me. And I get to work with people who get to advance these ideas. And special thanks to Tom White and Talitha Bromwich, who I work with very closely, who are postdocs in the Nature Positive Hub. Okay, so here's my final takeaway, right? Nature markets for the 21st century. Here's my kind of golden rules. If you want to solve the global biodiversity funding challenges of the future through nature markets, make sure that the thing that you're buying is real, and that the mechanism that measures how much of it there is based on real data and not an Excel spreadsheet. So in practice, this means lots of things, right? If you are measuring some kind of proxy, test your proxy. Make sure it actually correlates with the outcome that you want. If you have designed a system that enables you to offset or generate revenues from future promises, make sure that those future promises will actually happen. Otherwise, it's kind of just an illusion. Now, the second one is, right, if you buy one of these things, you need to make sure we have the governance in place to make sure someone would find out about it and someone can make you do it if they find you're non-compliant. And we don't have that now. So just basic suggestions. We need basic monitoring of the outcomes of these nature markets to flag areas that are at high risk of being non-compliant. Use a metric that we can actually check, for example. You need to have a sufficiently staffed local government, otherwise you have no regulator to be able to enforce or monitor this stuff. And you need to make sure you have a legal system and sufficient legal capacity in your regulator to be able to enforce it legally if you get something that goes wrong. We don't have those things in nature markets today. And if you want this stuff to really upscale, you need to make it very, very profitable. And that will never happen if it's voluntary. That will only happen if you have a regulatory driver of demand, if it becomes mandatory to buy this stuff, and if these markets are governed in a way that you don't let rubbish credits outcompete good credits. And a really important one is, from the history of nature markets, we often see that governments intervene when prices get too high because they end up being a kind of barrier on economic activity. We can't allow that. We need to allow these things when they start doing their job and essentially becoming sufficiently expensive that some development doesn't go ahead because it has impacts on nature that are too high. We need to accept that. And that is our way of integrating the value of nature into the economic system. That instead of governments intervening and then bringing down prices every time nature markets become an economic constraint, which is traditionally what happens. So, my talk was about nature markets for the 21st century, been studying them for a long time. And ultimately, the conclusion I'm coming to is they will play a part of the future, mostly because of the intense policy rhetoric around them. I'm also pretty confident that they will play a very small proportion of our overall nature finance goals, both because they have these major conceptual problems and because I just cannot see them scaling up with their current financial properties. So to me, it's very clear that the next step is to unleash research and policy discourse and political capital around the limits to markets and to rejuvenate the desperate search for non-market ways of delivering on our nature recovery objectives. Perfect. So thanks so much for your time.
Thank you so much, Sophus. It was as electrifying and illuminating and stimulating as I had hoped. So thank you for that. I'm going to ask for questions from the room, and we've also got a lot of people online, and so we'll start to pull some questions from online. But maybe to start, you sort of drop the little bullet at the end about the need for non-market solutions. What types of things are you talking about there? Maybe that would be a question I would ask, and then let's start getting some hands up, and I'll come and collect some answers as questions as he's answering that question.
Yeah, I mean, so we've been doing a lot of work on this, talking about this. Justin, Theo, Stanley, who's in the crowd. Yeah, as a team, we've been thinking a lot about this. I think the problem, actually, Theo thinks the problem, and I've inherited his view, that we need to distinguish between the ways that we raise money for investments in nature and the way that we spend money to deliver conservation. And non-market solutions around both of those things, well, the ways that we raise money are the politically unacceptable discourses of taxation, the taxation of damage to biodiversity, the regulation of activities that are too harmful to nature. I think it's totally mad, for example, that you are still allowed to generate immense profitability from investing in soy production in the Brazilian Amazon. Right? It is mad, and that is there are regulatory solutions to this that do not rely on sort of light touch voluntary approaches to disciplining finance, but we should not be permitting deforestation in the Brazilian Amazon, and we should not be permitting the specific economic activities that cause deforestation in the Brazilian Amazon, And so there are clear regulatory solutions here that I think are superior to nature markets for solving these particular problems, and they are not market-based. And on the spending side, yeah, I mean, so there's a whole issue about the quality of the specific ecologies that are delivered through nature markets is pretty low, and there's lots of things that we could learn about how to do better conservation. There's many people in this room who are better qualified than I am to discuss this, but I would like to see money dispersed for projects that have less deterministic structures, the deterministic structure that you require to be able to build a cash flow model to raise private finance, for example. You need to say, I need to implement these specific land management activities today to generate this many trees, to generate this many carbon credits in order to generate my revenue stream. A very deterministic structure to your investment that fundamentally affects the ecologies that come out of that investment mechanism. Well, a non-market approach would say, no, we're going to pursue ecological process-driven approaches to delivering conservation that do not have a pre-specified outcome and therefore cannot easily be monetized, but are much more likely to generate qualitatively better ecological outcomes, these kind of things. So once you break free of the paradigm of markets, then you don't need to create specific ecologies to satisfy the needs of markets.
Very good. Thank you. So I saw two hands on this row. I'll take 3 questions from the room and bundle those for Sophus. So I've got 2 here. Any more hands? One behind there. Great. 1, 2, 3.
In Oxfordshire, we have the North East Cotswold Farmer Cluster, who are doing a lot of work in this area. They see it as really important for making regenerative farming economically viable for them. Have you had a chance to talk with them? Any reactions, if so?
So yes.
Bundle the questions.
Right.
So I wondered if we could return to the practical implementation within the UK, how you see BNG operating for nationally significant infrastructure projects, because obviously that's an element that we haven't seen so far, as opposed to big developments. And secondly, also on Tuesday, DEFRA announced their criteria for delivery of the 30 by 30 goals, in which they mentioned both ELMS and BNG, but they also mentioned other mechanisms and incentives. And I wondered, within this framing, what you think those incentives and mechanisms could be.
Thanks. So for many years, ecologists have been arguing this offsetting process is a license to trash. And now it looks like it's not even a profitable license to trash. So would it be a good idea to just try and kill the whole process off before it does any more harm?
Great. You got all those, Sophus?
Yeah. Okay. North Cotswold Farming Cluster. Yes, have engaged with them. Immediate reactions. I mean, I really admire anyone who's trying to change this paradigm. And so, yeah, early impressions are kind of excited, but I've got no more than that, unfortunately. Biodiversity net gain for NSIPs. Ooh, there's so much stuff I can't say. The NSIPs are going to create a very large liability. NSIPs also own quite a lot of land and have access to quite a lot of land, which means that I don't have proof for this, but my prior assumption would be that they will react quite similarly to the way that large housing developers react, which is to deliver all their stuff on site because they have a massive land footprint. Yeah, I don't see it panning out dramatically differently from the way that it's implemented for major housing developments. And major housing developments in our sample of early adopters are the ones that systematically are most likely to demand 0 offsets because they are able to meet their full liabilities on site. That would be my hunch. But you know, I actually don't know enough about this, like basically the specific red line boundary relative to the amount of land conversion in NSIPs to know how much land they have to play with within that system. But a mega interesting area of future research. Okay, what are the other 30 by 30 incentives? You mentioned ELMS and BNG. So ELMS is just agricultural subsidy. BNG is this, yeah. So I think when I saw that, I mean, they mentioned a bunch of other policies like species conservation plans in there, which is public policy financing. I mean, they have aspirations for upscaling all of the markets, right? So then there's a little bit of woodland carbon code, there's a peatland code stuff. So yeah, I mean, the ELMS is the big one. BNG is seen as the big private market, but others will play smaller roles. But then there's also like massive additional public finance that's not necessarily included in that. What's the name for the massive nature recovery projects? Where's Ella? Where? Landscape scale, yeah, okay, yeah. So the landscape recovery projects, right? They're also just a massive public subsidy. Oh, hi. So that could feasibly be the other forms of finance they're talking about. Are offsets a license to trash? Yeah, okay, that's a good question. My reading of the academic literature is actually no. They're kind of nothing. They're not a license to trash either way. There's been a few empirical evaluations to prove that it's license to trash. you need to prove that as a result of the offset, something valuable was damaged that wouldn't otherwise have been damaged. And the few empirical evaluations of offsetting in the literature basically don't show that. They show no change. They show that the presence of an offset system doesn't really affect whether or not stuff we're allowed to damage stuff that we wouldn't otherwise be able to damage. A few evaluations have shown that after offsetting systems were introduced, it wasn't like more planning developments got approved or stuff like that. In the context of BNG, I actually advocate for BNG over the existing planning system. Basically, before BNG was introduced, we actually had the same regulatory objective. It was already written into the National Planning Policy Framework that we had to achieve net gains where possible for nature, I think was the terminology or similar terminology. And what biodiversity net gain did was introduce the way of measuring it through this Excel spreadsheet. And despite all its immense flaws, I think it's more likely than not that the planning system with BNG embedded in it is better for nature than the planning system that didn't have BNG embedded in it. So, I've presented all this stuff about its weaknesses because it falls extremely far of BNG. It falls extremely far of what its policy is doing, the policy outcomes that are embedded in its name. And it really annoys me that it misses. It's like after 50 years of doing nature markets, we had an opportunity to do them really well. And then we've replicated loads of the stupid problems of the past. And that's just really upsetting. But I don't think it's worse than was existing already. So that's my take. All right.
Great. So I've got many questions online. So I'm just going to ask 3 of those, bundle those for you, and then I'm going to come around and take some more questions from the room. So, and there's lots, please keep them coming in online. I can't get all of them, but so there's a question here. Brilliant reflections. It'd be great to discuss the projects that do work and that are in the nascent market now. Is there a forum that you're involved with? Sharing what works is crucial for the future. So that's sort of one question. The second question on the TNFD, the Task Force Nature Related Financial Disclosures, if it were mandated, what might it do for nature markets? And then there's a question on your last point, the evidence that you've got that direct public investment could do any better. Wouldn't we still have people trying to demonstrate success against poorly designed metrics? And then stick some hands up. I saw one hand there, one hand at the front.
Very good.
There,
okay.
Back there.
A forum for what works in nature markets. Yeah. Okay. So there are these kind of fora that exist. The Green Finance Institute are involved, for example, in some of these accelerators, private finance accelerators, and a lot of those are providing the capacity building for basically projects to attract private finance. And some of that is institutional learning about the projects that went well. So I think some of those fora exist. And yes, totally, social learning is going to be a really important part of like what makes these markets work. So yeah, big endorser. Would making mandatory disclosure do anything? I asked a lot of people about this in my research. And nobody can give me a good explanation of why TNFD will make them invest in nature. So it's fascinating. It's like, it's this kind of assumption that if you report your impacts and dependencies on nature publicly, and under TNFD, there is some cool stuff, like you report your nature positive actions. So in theory, there's a little box there that says you could report how much you invest in improving nature. But just reporting your impacts and dependencies on nature publicly does not trigger action in and of itself. And for me, the links for why an organization can address its nature-related dependencies by buying a product from a nature market is still way too weak. So my hunch would be that making it mandatory would not drive private investment at all. That's my hunch, because I think that the link between what you have to disclose and actually buying something to address some kind of need isn't strong enough for me. So my hunch is it would do nothing. Is public finance any better? Yeah, this is a great question. I've seen one empirical evaluation that compared the two. It's a paper by Sven Wunder et al. Published this year. And basically it compares, it's a meta-analysis that compares the outcomes of publicly funded measures to reduce deforestation and privately funded measures to reduce deforestation. So basically, it's like public protected areas versus REDD+ and a bunch of other stuff. And that paper detected no difference in the effectiveness between public and private finance. So that is interesting. So when yeah, I mean, like, we've got to get better at conservation, no matter what the financing mechanism is. I think that what I'm getting at here is not just about the effectiveness, which I agree is also limited in public finance. It's about the possibility, right? Once you are unchained from having to deliver the specific commodity through these private markets, then you have the capacity to generate a much more holistic type of nature recovery. So, for example, conservation projects are, I think, have greater liberties to do conservation for and with local people when they're not necessarily financed by markets, because it gives local people a greater say. And when local people have more democratic and participatory opportunities in conservation, it introduces uncertainty that are quite complex for an investor to deal with, but might be something that's really good for the overall social and environmental outcomes of conservation. So yeah, so I would favor forms of conservation that are scientifically rigorous, and we should be continually improving to deliver more and more effective conservation, but not necessarily shoehorned into delivering the specific commodities that are bought and sold in markets. But you're right to call me out on that, because the implicit assumption would be that public finance is better, but empirically, we don't have evidence that that is the case yet. I just think it makes you more free to do more interesting stuff than privately funded conservation.
Super. And unleashes us from the worldview of commodification of everything. Right. So there's a question here, and then I'm going to go to there. We'll take those three, and then I'll come back to you in the next round.
Actually, on that point, I read an article by Guy Shrubsole the other day on there potentially being a public right to buy law being brought in. It was mentioned in the King's Speech, and Scotland already has a public right to buy law. And there are a couple of land areas that have been rebought by local communities through a mix of private funds and public grants. I was just wondering if you think that that might be a mechanism for better governance of these conservation areas.
Yeah, thanks, Sophus. Quick question about the data set from Australia. Do you have data that you could use to, understand why there are differences between the good and the bad offset, so to speak? So in other words, like to try to look at what are the parameters or the factors that might drive one to be better than the other than the, high level overview that you've provided today. And just on the point of just a little feedback to about the first question. For me, if you could say it is licensed to trash if you sustain the license to operate. So just something to think about, but that's obviously hard to show.
So in your introduction, Sophus, one of the things they mentioned was that you do a lot of work trying to directly, or not maybe directly, but influence policy and working with policymakers in the UK government. What have you found has been tools that enable you to bring your B&G research and other research to them in ways that they like listen, and what does not enable it? What have you tried different methods, approaches, or is there stuff in the literature?
Super questions. Okay, right to buy land. I don't know enough about it to have a good answer. There are people in the room who are much better qualified than me to answer that question. I suspect, for example, Justin, Theo, people have done thinking about this. So I would give a rubbish answer. So save that one for the drinks. Data on why some are good or bad in Victoria. Yeah, great question. For me, this is like one of the holy grail questions in offset world. Like, what are the conditions that determine whether or not something works or not? Interestingly, there was a paper this year published in Ambio that is a massive, massive review of empirical studies into conservation effectiveness, and it does trying to look at what are the predictors of effective conservation, and the number one was community stewardship, yeah, and indigenous stewardship. So we know, yeah, you know, there's an awful lot in conservation science to try and understand what makes conservation projects work, but not yet in the context of nature markets. No, our data from Victoria does not enable that. It was literally just shapefiles, right? That's all we got from government, shapefiles for that one. So obviously, what to do that, I have a hypothesis, for example, that it correlates quite a lot with the specific values of the landholder. So I know one person who did, Carla Archibald, did an amazing PhD to try and Blake Simmons, but both of them did work to try and correlate land clearing behavior with actual psychosocial characteristics. And that is a really interesting area of work. Right? Are there specific types of people who systematically deliver better outcomes? Which I think seems very possible to me, but it's really hard to measure. Okay, what has enabled me to bring work to government? Yeah, I consider my policy impact like basically minimal, right? I think I've achieved almost nothing. So I don't think like the stuff that's kind of worked has been having a loud online profile, and the places that I've seen our work enter have not really been in public policy, but they've been in private practice. So I am looking for that answer. You know, look, when I'm engaging with policy, the first thing is I enter with a feeling of immense appreciation and admiration for civil servants. Like my experience has been universally good with civil servants. And whenever civil servants have not delivered a specific outcome that I necessarily would agree with, I nearly always see that it is some kind of other kind of structural constraint on their behavior that is driving that, and not themselves, you know? So I really admire civil servants, and that means that we can have good conversations, because I genuinely don't believe I could do any better than they could do, right? So there's no arrogance in those conversations. So maybe that sets up kind of a good dialogue. Another systemic privilege, right, was when it just so happened that when I was doing my PhD, like I knew one of my best pals was a senior civil servant working in this space. And so that opened up a door that I wouldn't otherwise have had access to. And so like a big chunk of that is basically just a systemic privilege that's non-transferable. Yeah. And you know, for the PhD, I spent the first 3 years of my PhD curating an online profile that basically tweeted and evidenced, you know, opinions that had scientific papers linked with them. So, you know, evidence informed opinions that were related to stuff, and no one cared for 3 years. But then over the last 3 years, people started caring. And so it was just a really slow build to develop some kind of public reputation to do that kind of stuff. And I don't know if there's any shortcuts, but it just takes quite a lot of time, and I find it quite draining, to be honest. Yeah.
So take a few more questions. You had one there. Let's go then to the back. Any more in the room? And then I'm going to take a couple from online, and then we'll wrap up. One here.
Yeah, thanks so much for your neat summary of where we are with these markets. One thing that particularly interests me is the irreplaceable habitat, which cannot be traded. It's embedded within the UK biodiversity net gain, the dreaded spreadsheet. I wondered, through any of your reading of the literature and case studies, whether you had got a sense of what bespoke compensation might be needed for, say, cutting down ancient trees and the like, or is the literature pretty silent because the focus is on the tradable part, which is, you know, the main concern of a market?
Thanks for a great overview of an area I don't know very well. I hope this question's not out of your area. One point you made was that the issue of being able to demonstrate you are doing what you say you're doing. So these are not worthless. I wondered if you had, without getting too technical, I wondered if you had any ideas about what would be the key things to go about doing to achieve that, and what might prevent them, are there things that would make it difficult to do within this system?
Any last questions in the room? All right, just 2 there, Sophos.
That's awesome. All right, irreplaceable habitat. Okay, so the context behind that question is in biodiversity net gain, you are not supposed to be able to impact irreplaceable habitat. So you can impact and trade habitats of different distinctiveness categories, but some of them are irreplaceable and they can't be touched. Except they can. You just have to agree bespoke compensation with the council. So it's a mad. Instead of creating a hard and fast rule about it, they still built in the flexibility to damage irreplaceable stuff. So the question is, like, do we now know? Is there any evidence about what the compensation has to be to damage irreplaceable stuff? No, I don't know. Within our data set, no irreplaceable stuff has appeared. So I genuinely don't know. And it's a wonderful question, and something that will pay attention to over the next few years, because that will get at Clive's license to crash question as well, right? That is a question of quite serious implications. And then proof that stuff works. Okay, so I think I'm really glad you asked this question. Basically, if the stuff that you want to work correlates with some kind of land cover outcome, so if it's forest restoration, deforestation prevention, yeah, this paper with Thomas Winfield outlines what we think. Basically, we have real-time vegetation change data sets, and with statistical matching, we think we can derive real-time counterfactuals that are sensible. So we think, like, in real time, you can demonstrate the additionality of an investment when the outcome variable is an observable land cover measure. But for lots of biodiversity-related stuff, it's not. So this is where it gets really difficult. And this is where we've got a couple of papers coming out on biodiversity credits. Estimating the counterfactual for an intervention that changes some aspect of biodiversity is nearly impossible. I've seen one paper ever that's done it. It's Hannah Warcock's paper a couple of years ago in Nature, looking at the causal impact of protected areas on water bird populations. And the reason it was able to do that was because it had a global data set, so sufficiently large sample from which to construct a population counterfactual. But we don't normally have that for a conservation intervention done at project scales. So then you need to make some decisions. My scientifically favored approach would be you couple some kind of land cover measure, so that you estimate the additionality of the intervention from a land cover measure, and then you couple that with site scale biodiversity measurements, measuring change in biodiversity before and after. And basically, if the direction of the signal of both is in the same direction, you persuaded me that it would work. Or you make some other assumptions. The other approach, that's the other one I would advocate, in the absence of you being able to derive a sensible counterfactual, then I would advocate for straight up before after monitoring, and you're not able to make claims about what you're delivering. So you're not able to claim that you're causing an improvement in biodiversity. You're only able to claim that your investment is contributing to biodiversity conservation. So that gets rid of the problem, because you're not claiming that you're delivering anything. You're just hoping that you are. And the scientific methods of your monitoring allow you to say that, but they don't allow you to make a causal claim. Does that make sense?
Very good. So 3 last questions from the online audience, and apologies, I can't get to all the questions that are here, but one on BNG. How much of a problem is understanding the existing biodiversity level, perhaps because the field work is incomplete or far too brief? Secondly, is the high required profitability you talked about an artifact of talking to private equity because the nature markets are immature? And then they cite the example of offshore wind was initially expensive, but came down, so we can all make loads more money. And then there's a question here of most of the metrics seem to focus on vegetation, which in many parts of the world is almost the antithesis of biodiversity conservation. Do you see a future for moving beyond simple vegetation measures to get a better handle on biodiversity health, some of which I think you just touched on. And then actually there's a last one that's just come in, building on Andy's great question. Is it realistic to come up with a simple metric for assessing something as complex as biodiversity? And then I think we can go for some drinks.
Super. Okay, how much do we know about our UK biodiversity baselines? Shockingly little. Really interesting. Really interesting. So not a UK applied ecologist or applied ecological expert, but having chatted to people who do lots of applied UK conservation work, deriving our biodiversity baselines, even for example, species present absence of some charismatic species. Like, we actually don't have good data. It's amazing in the country that has, you know, some of the densest biological recording in the world. It's phenomenal that we don't have these biodiversity baselines. In the context of BNG, the baseline is just a consultant visiting a site and looking at what habitat it is. So that's less of a problem. It's quite easy to construct that baseline for a given development, because the process has been designed to be so simple. So if it was to be ecologically realistic, yes, you would want a good baseline. And then, you know, we need a better English strategy for collecting systematic biodiversity data. Right, could nature markets become more profitable as they mature? Yeah, they definitely will, because loads of these early problems, lots of these limitations are things that can be brought down through trial and error and learning. No doubt about it. You can definitely improve the profitability of nature markets through reducing transaction costs. You know, every time we basically do a nature market transaction these days, lots of people have to create a novel legal agreement, which costs a lot of money, yeah, to hire lawyers to be able to do that stuff. And once the first legal agreement has been produced, other people can copy it, and so the costs come down, all these kind of stuff. So I'm in no doubt that the costs of doing for-profit conservation will come down over time. And so I'm in no doubt whatsoever that it will become more profitable. Will it become as profitable as a tech stock? No, I really doubt it. I really, really doubt it. There is a world in which I'm wrong, but I'm not betting on it. Can we move beyond vegetation measures? Yeah, vegetation measures are this really unhappy compromise between doing something that has some kind of ecological basis and something that is easy. Because, as I said, all of these nature markets are implemented, all of the mandatory nature markets, not the voluntary ones, all of the mandatory nature markets are basically implemented through planning policies, and the people who oversee them are basically regulators with specialized ecological knowledge. And so, yeah, we default to these vegetation-based indicators because they're the only ones that are really easy. As Nat showed in the paper I showed earlier, you know, in some cases, they literally don't correlate with your desired biodiversity outcome at all. So yeah, no doubt we need to go beyond them, no question. But that's kind of, going beyond them requires constructing the institutional capacity to be able to interpret more complex information. And we don't have that just yet. Can we come up with, is it possible to come up with a simple metric? I am not an ecologist. There are literally, so if you look at the Task Force on Nature-related Financial Disclosure, it embeds hundreds of potential biodiversity metrics in it. There are hundreds of biodiversity metrics. But so few of them have been empirically tested even once. So I can't answer the question because it's a deceptively complex question. It's like, can we come up with a simple metric? Possibly, but we haven't tested any of them yet. So we don't know. Like, we're literally shooting in the dark. I mean, this is such a rare paper because it's an empirical evaluation of a really widely used biodiversity metric, but those things just don't exist very often. So if there's like a call for ecologists from this talk, one of them would be like, let's stop creating new metrics and do robust empirical evaluations of existing metrics to narrow down on stuff that has even the vaguest correlation with some kind of biophysical reality. That's the direction I would go. All right.
Brilliant. Any closing thoughts?
No, they were wonderful questions, and thank you so much.
Brilliant. Well, thank you, Sophos. A true tour de force of the state of nature